Well, good evening, everybody. Welcome back to Strongman Personal Finance. We're going to cover the earnings for AMD, Arista Networks, and Snapchat. And we have to be very quiet because my kids are sleeping right now. And if any of you wake them up, there's going to be a big problem. So let's dive right into the earnings. Let's see what AMD is doing after hours. So AMD, Advanced Micro Devices, was down 1.4% on the day and is down 6.28% in the aftermarket. I guess the earnings weren't good. Let's see what happened. So, AMD today announced financial results for the second quarter of 2025. Second quarter revenue was a record $7.7 billion. Is that true? Is that actually a record? Let's go look. I highly recommend you use stockanalysis.com to compare financials from across time for any company. It's pretty good aggregator of information. But always verify with the financial statements because it could be wrong. So, yes, it looks like we're at an all-time high for revenue. That's wonderful. Gross margin was 40%. Operating loss, they still have a loss. They had a loss of $134 million. And net income was $872 million. Okay, so they had a loss from operations, but they had positive net income. They must have had some kind of one-off event that happened. I don't know. So the gross margin compared to the past is, let's see. Oh, that's not good. Their gross margin is getting absolutely freaking cooked. What's going on here? Okay. We delivered strong revenue growth. We are seeing robust demand across our computing and AI product portfolio, AI, and are well positioned to deliver significant growth in the second half of the year, driven by the ramp of our AMD Instinct MI350 series accelerators. So here's a breakdown right here. So we see revenue is up 32% year over year. That's pretty incredible. And then quarter over quarter, it's up 3%. Gross profit is up 7%. So they're having a little bit of issues, Well, actually, no, hold on a minute. Gross margin. Yeah, their gross profit didn't really grow that fast. So they're having issues with profitability on the top of their income statement. Maybe they should raise prices a little bit. I don't know. Can they raise prices? And then quarter over quarter, their gross profit is down 18%. So they're taking some hits to their margins. Their revenue is growing just fine, but their margins are definitely having issues. Operating expenses are up 23%. That's pretty big growth, but it did not outstrip revenue. So it looks like the big deal is with the gross margin, the actual profit that they get from selling the chips and other items that they're selling. Operating income swung to a loss. Operating margin was negative 2%, and they had diluted earnings per share of 0.54. I don't know why. We'll see in a second. Data center segment revenue was $3.2 billion, up 14% year over year. That seems kind of slow. I mean, you think with a data center, it'd be vertical lining. Client and gaming segment revenue was up 69%. Wow. Client revenue was up 67%, driven by strong demand for the latest Zen 5 AMD Radeon desktop processors and a richer product mix. Gaming revenue was $1.1 billion, up 73%, driven by an increase in semi-custom revenue and strong AMD Radeon GPU demand. Well, gaming's a bright spot here. Embedded segment revenue was down 4% as demand in end markets remained mixed. Okay. So they have some announcements here. Oh, look at all the new stuff. I want to see why they had an operating loss, but a bottom line profit. Sounds kind of weird. All right. For the third quarter, AMD expects revenue to be approximately $8.7 billion plus or minus $300 million. At the midpoint of the revenue range, this represents year-over-year growth of approximately 28%, still pretty robust, and sequential growth of approximately 13%. Non-GAAP gross margin, which is totally irrelevant, is expected to be approximately 54%. Our current outlook does not include any revenue from our AMD Instinct MI308 shipments to China, as our license applications are currently under review by the U.S. government. Yeah, we got to do everything to really sabotage U.S. business with China now, don't we? All right, let's go dive into the income statement. I want to see why they had a loss. What happened here? Okay. So revenue we know is up quarter over quarter. Cost of sales significantly jumped. They're having issues controlling costs. I don't know what it is. Amortization of acquisition. Okay, that's not. So R&D, they spent about 150 million more than the last quarter. Marketing, general and admin, they spent about 110 million more. And then they cut down on amortization a little bit. Let's see. Okay. So the only reason they had a profit was because of an income tax provision. So I'm assuming because of the new tax law that, cut tax rates, they were able to adjust a balance sheet item where they expected to pay taxes in the future, but now they don't have to. That's called a deferred tax liability. So what they did is they took that off because now the tax rates in the future are going to be lower. They expect to pay less taxes. And they were able to get a tax benefit. So that is literally the only reason they were profitable. Let's go look at their profit over time. Let's see. Operating income. Yeah, this is a very boom and bust business. Look at this. They go from massive operating income, massive profitability, and they swing right back to unprofitability. If that ever happens to NVIDIA, that's going to be bad. All right, earnings per share has grown steadily, but like I said, the most recent earnings was their only reason they had a positive earnings per share was because of a tax benefit. Free cash flow is exceptional in the most recent quarter. Look at that. Free cash flow per share is exploding. Why is that happening? Let's see. All right, we'll see in a second. So their balance sheet, let's see if there's any crazy items on here. Assets held for sale. What are they? They're selling. They have 4.3 billion of assets held for sale. Let's see. Goodwill. See if there's anything crazy on here that jumps out to me. They packed on some long-term debt. They packed on about 1.5 billion of long-term debt. And that's probably why their cash balance went up. Let's see. Oh, there really wasn't a big change in their deferred tax liabilities. Interesting. Did they buy back any stock? Yes, they did. So in the last 6 months, they spent about 400 million buying back stock. Okay. Why such a change in cash flow? Let's see. Release of reserves for provision of uncertain tax positions. Yeah, so like I said, the only reason they had a profit was because of a tax change. I mean, they're pretty solid growth in cash flow. Let's see. Or it could have been a timing thing. But I mean, pretty solid growth in operating cash flow. For capital expenditures, they had a $1.7 billion acquisition. Sue me. And so they spent 478 million buying back stock, but they generated 155 million from employee stock options exercises. So overall, I mean, I guess the earnings weren't that impressive. Maybe the Wall Street didn't like their guide, but they're having issues controlling costs on the top of the income statement. That's the number one thing that jumps out to me, because that gross margin contraction is pretty significant. So that's AMD. I guess the market wasn't happy with it, and now the stock is down 6%. Let's see, how's the stock been doing? Yeah, this thing is all over the place, man. It almost looks like you just wait till it looks like you just wait till the operating income is really low and then you buy in. That's what it looks like to me. Not financial advice. So that's AMD. Next, we'll cover Arista Networks. What happened to Arista? Oh, it's up 13%. Okay. Arista Networks, an industry leader in data-driven client-to-cloud networking for large AI, data center, campus, and routing environments, today announced financial results for the quarter ended June 30th, 2025. Revenue of $2.2 billion, an increase of 10% compared to the first quarter. 10% growth in revenue quarter over quarter, and an increase of 30% from the second quarter of 2024. GAAP gross margin of 65%. That's pretty solid. A slight increase from the prior quarter and from the prior year. Non-GAAP gross margin, completely ignore that. GAAP net income of $888 million or 70 cents per share, compared to $665 million. So their net income grew by about 33%, a little bit more. That's pretty good. All right, let's see. Company highlights. Expands AI-driven campus and branch networking offerings. Acquired the VeloCrowd SD-WAN portfolio from Broadcom. Recognized in the Visionaries quadrant of the 2025 Gartner Magic Quadrant. Never heard of that in my life. Expands commitment to India for enterprise networking and we're getting into India, bro. And then they appointed Todd Nightingale as president and chief operating officer. Okay. For the third quarter of 2025, we expect revenue of approximately $2.25 billion. So quarter over quarter, that's a very slight increase. Non-GAAP gross margin, I don't know why they keep doing that. Non-GAAP is completely irrelevant. All right, let's go look at the financial statements. So product revenue grew by 32%. Service revenue grew by 22%. So product revenue definitely outstripped service revenue, both in growth rates and in the gross amount. Product margins, they have a 62% product margin, and then their service margins are probably insane. 82%. So obviously their usually services are more profitable than products, but that's still a pretty impressive product margin. What was it, like 62% or something like that? Not bad. Their gross profit grew by almost 50%. R&D expenses, slight growth, maybe 10% growth there. Sales and marketing grew by about 20%, but not a crazy amount of spending there. Income from operations grew by, this is their profit before interest and taxes, grew by 41%. And then their earnings per share grew by 34.6%. Shares outstanding. It looks like they actually, at least from a diluted share standpoint, a slight decrease in diluted shares outstanding. So overall, a good quarter. I mean, pretty robust growth in product revenue, decent growth in service revenue. Service margins are obviously higher than product margins, but they both have pretty impressive gross margins and no crazy growth in any of the operating expenses. So when you increase revenue on a product or service that has high margins and you grow it pretty quickly and you don't increase your operating expenses that much, you're going to have a big explosion in profits. Okay, this is a reconciliation of GAAP and non-GAAP, which is completely useless. Their balance sheet. They got $2.2 billion in cash, $6.6 billion in marketable securities, inventories of $2 billion, total roughly liquid current assets of $13.5 billion, compared to short-term debts of $4 billion. I see no issues there. Very light in property, plant, and equipment. Extremely light. They had some growth in property, plant, and equipment, but overall, they're a very asset-light business. Their longest term asset is a deferred tax asset. Basically, taxes they think they're going to save in the future. Let's see. Huge growth in deferred revenue. So deferred revenue is when you get paid up front. You get paid in cash up front, but you haven't earned the revenue yet. So you put it into a liability account. And when you see a bunch of deferred revenue, that's going to hit the income statement at some point. And that's a pretty big jump in deferred revenue. So I guess they've been receiving a lot of cash up front. And then long-term deferred revenue, non-current, is up about 20%. So that's a good sign. I mean, deferred revenue just means they got cash up front. And hopefully people don't cancel. Okay, we see some stock issuance. We see additional paid-in capital going up a little bit by about $180 million. And yeah, I mean, balance sheet looks fantastic. Pristine balance sheet. No major issues there. Operating cash flow. Let's see. Yeah, look at that. God. Deferred revenue. In the last 6 months, they recorded a positive inflow of $1.1 billion in deferred revenue. That's crazy. Their operating cash flow was $1.8 billion compared to $1.5 billion for the prior year. This is a 6-month comparison. The only way that could cook them is if they had to refund people, but I mean, is that really likely? All right, from the investment side, they paid $300 million for a business combination and acquisition. They spent almost $1 billion in the last 6 months buying back stock. Yeah, so they're buying back stock. They're growing revenue. Their margins are strong. Their operating expenses are under control. Their balance sheet is very strong. Very, very strong balance sheet. Seems pretty solid. I like it. What's going on here? Interesting. Maybe I should buy the dip. But there is no dip. It went up. All right, next. Snapchat. So here's their Q2 release. Let's see what happened to Snapchat. Snap. I've been covering this company on and off. Number one, Snapchat is a stupid app, okay? It's for like little kids. Anybody that has Snapchat and you're like over 25, you need to grow up. Anyway, so it's down 14%. I guess they didn't have good earnings. Let's see. Second quarter revenue increased 9% year over year. It's okay. Monthly active users increased 7%. Who was signing up for Snapchat? Daily active users increased 9%. Operating cash flow was $88 million and free cash flow was $24 million. All right. So net loss was $263 million. Okay, they're still posting losses on the bottom line. But they have positive operating and free cash flow. Let's see. Yeah. How much have they been losing money? Do they have any profitable quarters? I don't remember this company very well. It's probably all stock-based compensation. They haven't posted one operating profit in the last 5 years. That's hilarious. Stock-based compensation, bruh. Every tech company. All right. We deepen engagement with our community. Spotlight reached more than 550 million active users. Spotlight grew 23% year over year. We launched our new Snapchat app on Apple Watch. Why would you want this on your watch? Why would you have an Apple Watch to begin with? Enabling Snapchatters to preview an incoming message and reply using keyboard dribble. Come on. Don't have an Apple Watch. Snap Map grew to more than 400 million monthly active users that utilize our service to find their friends, explore local hotspots, and stay in. So you can just stalk your friends all day, basically. Hey, why is my girlfriend over at Chad's house? Okay, Snapchatters spending 30% more time talking on Snapchat. Over the past year, we onboarded thousands of creators to Snap Star program with the number of spotlight posts by Snap Stars. I want to be a Snap Star. Growing more than 154% year over year in North America. All right. They're diversifying their revenue growth. Ad platform improvements contributed to 7-0 purchase volume, increasing 39% for commerce advertisers. And total purchase-related ad revenue growing more than 25%. Sponsored snaps are proving highly effective in driving incremental conversions. Yeah, get your kids on the Snapchat so they can get bombarded with advertisements. Daddy, can you buy this for me? Delivering a 22% increase. Sponsored snaps are driving an 18% lift in unique converters. Sponsored snaps. We invested in our augmented reality platform. Our community uses AR lenses in our Snapchat camera 8 billion times per day. And over 400,000 developers have built more than 4 million lenses. Oh, is that how you can have the stupid doggy ears? Lens Games engagement has continued to grow, now reaching over 175 million monthly active users. School photos. God, it's just a bunch of crap. All right, Q3 outlook. Snapchat will discuss its Q3 2020 outlook during its Q2 2025. Okay, well, I guess. All right, let's look at the profit and loss. Interesting. They start with a statement of cash flows. Why? I've never seen anybody start with a statement of cash flows. Okay, so obviously they're unprofitable because of stock-based compensation, which is a future cost. Go look at share buybacks. That's real cash to keep the float. Let's see. So stock-based compensation is flat. Depreciation's up a little bit, nothing crazy. Losses, gains on debt and equity securities. Okay. Let's see. So operating cash flow was $88 million compared to negative $21 million for the prior year. That's good. Operating cash flow seeing pretty significant growth, at least. What else did they do? They spent $20 million buying strategic investments. They spent $35 million buying acquisitions. And let's see what they did. They spent $243 million buying back non-voting stock. And they paid $36,000 back of convertible notes. Interesting. What's going on here? So we know revenue grew like 9%. Cost of revenue grew by 11%. So their cost of revenue is growing faster than their revenue. R&D grew by about 10%. Sales and marketing down a little bit. And general and admin up about, 10% maybe. Okay, so obviously, without stock-based compensation, they'd be profitable. They had interest income of $33 million and interest expense of $27 million. Okay, so they have net positive income from interest, but I don't think that'll last forever. For a total net loss of 16 cents per share and slight share dilution. All right, cash. Almost $1 billion in cash, almost $2 billion in marketable securities, $1.1 billion in receivables. Yeah, their cash and marketable securities balance dropped a little bit, but that's probably because of the acquisition. Property, plant, and equipment grew by about 10%. So they're investing in more, servers. Let's see. Goodwill, that went up a little bit. That means they had an acquisition. Long-term debt paid off a little bit. They got $3.5 billion of long-term debt. Ugh. Yeah, I don't like their long-term debts versus their long-term assets. So they got $3.5 billion of long-term debt, and their largest asset is goodwill, which is an accounting plug entry. Yeah, they must have been using debt to make acquisitions because they definitely weren't doing it to buy freaking property, plant, and equipment. Jesus. Yeah, I don't like that. From a liquidity standpoint, they got $4.2 billion of current assets and $1 billion of current liabilities. There's no risk of bankruptcy anytime soon, at least. That's good. Treasury stock went down. Interesting. How does that freaking work? Do they issue more shares? Okay. They have cumulative $13.6 billion of losses over their lifetime. Do they do any buybacks? I forgot. Let's see. Yep. This is the cost of stock-based compensation. $243 million. That's a huge explosion in buybacks. So the prior year, they bought back $75 million worth of stock. Now they're buying $243 million because they have to control the shares outstanding. They have to control it. Otherwise, you're going to be massively diluted. So that's a real cost. Okay, so, okay growth. Nothing freaking crazy. How have they been growing before their revenue? Yeah, their revenue growth is definitely slowing down a little bit. You compare it to like Meta, which is exploding in freaking revenue growth. What was Meta's most recent quarter? 21%. Good God. Snapchat is a small shadow of Meta. How's the stock price done? Jesus Christ. Let's look at their valuation. Hold on. Where the hell's it at? Okay. Forward PE is roughly about the same. Price to sales near all-time lows. Price to book near all-time lows. Price to you can't even read this. This is so bad. Yeah, their price to operating cash flow has been steadily going down. Their peg rate. Oh, wow. It must be cheap now. I don't know. Return on equity negative 47%. Typical software company that dilutes massively. So that's the earnings. AMD posted a loss. Arista Networks, pretty stellar. I mean, everything looks pretty stellar for this company. And then Snapchat, blah. All right, let's do some comments. All right, before we get into comments, check out my CPA services. I am a certified public accountant. If you click that link, you get a variety of different things you click on. If you see the bottom, there's actually a free Discord. You can join our free Discord. If you're a small business owner or just a person that has a family and a W-2 job, I'll be more than happy to do your taxes any state in the United States. You can get a free initial consultation with me. You click that link, you click the tax section of it, and you can book a free consultation. You can talk to me for free for 30 minutes. We can review your tax situation. And if you need services or additional consulting, I can quote you at that point. We're going on, my fourth tax season, third as an independent preparer, and my fifth tax season overall. Ryu, what's up? And we're only doing member comments. Sue me. Stockmo called me a troll for bashing him on Twitter. Super Microcomputers also got cooked. I am all in American. Oh, you doing the Sydney Sweeney trade? Blessed art thou, dog man. He was pumping it at 155. Buy AMD when operating income down. I mean, it seems like a trend. It's like you see, obviously it's not a buy or sell recommendation, but you see, operating income's exploding, and then it collapses, and then the stock collapses, and then eventually the operating income recovers. It's very cyclical. You tell me when you buy, and I'll buy too. I'll put in $5. ANET. I was impressed. I mean, at least financially, that company looks pretty solid. I mean, everything about them was pretty pristine. In my 6 years in the market, I learned that I will go all into tech, especially Mag 7 in the next crash. Easy money, bro. It's easy until it isn't, dog. It's easy until it isn't. ANET is the Jesse stock of the century. I mean, I got nothing bad to say about it, at least from a fundamental standpoint. ANET equals Fortress balance sheet. That's true. What made you into getting into these boring stock analysis? Well, it's earnings season. I mean, my plan, look, guys, my plan all along, I'm going to do daily live streams covering the news. We're in the middle of earnings season, so now I'm covering all the news for earnings. But next week, I could be talking about Trump's stupid tariffs. I don't know. Let's see. Who's my slayer, Hans? Are we debating Hans in the comments here? Hans, you're an absolute clown. I feel bad for your wife and children, but I doubt you have either damn to kill. Snapchat earnings from Strongman. I never imagined this day would come. I covered them a couple years ago. It's been a freaking turd. The GOAT with 100% track. Oh, yeah, Gil's crushing it this year, apparently. Who capital mindset analysis clown frauds laughed at when he sold QQQ for uranium, and he absolutely made a killing. Aaron, who people are willing to pay $200 a month to hear stock picks. Meanwhile, pay a few bucks to hear the prestigious capital mindset analyst fraud clowns. Jesse Stone Cold and the Cambodian clown had the nerve to question me and laugh why I would sell QQ. Who's the Cambodian clown? Is that, you talking about Khmer? Who's the Cambodian clown? LMAO, dumb clowns. You think I'm going to... Gil, you are spamming. Jesse's the GOAT. Shut your mouth, Gil. Jesse, the same guy who questioned me why I would QQQ and laugh when I was making a mistake. Let's see. Look at Axon. What is Axon? We're going to have to end this stream pretty soon. It's up 16% today. What the hell? Jesus. What is this? Develops, manufactures, and sells conducted energy devices using the Taser brand in the United States under the Tasers. The company also offers hardware and cloud-based software solutions that enable law enforcement to capture, securely store, manage, share, and analyze video and other. Man, you should have bought this right after George Floyd, bruh. I wonder if it vertical lined after George Floyd. Oh, it's been ripping, dude. Oh my God. Wow. Thank you, my King George. Bro, why do you get so deep in these earnings? Amit only reads the EPS beat and talks about the price change. Amit's just a better analyst than I am, okay? Oh, they beat. Oh my God, the future, bro. Oh, look at this. Member for 3 months. Look at this loyal pay pig who lets me plunder his bank account. Bring Strongman. I got a stock mode video after this, okay? After Kevin threatened to sue, Strongman died. That's true. I'm cooked. Post your buy and sell orders. Okay, Damien, the next video is going to be covering Stink Blow. So I need to pull up the information. Then we're going to make fun of Stink Blow for a couple minutes. And then I'm going to go to bed because my kids are going to wake me up very early tomorrow morning. So that's the plan. Anyway, thank you for tuning in. Let's see. Check out my CPA services. Free consultation. And have a wonderful night. See you soon.